7th, 2026. Glad to see everybody here. As usual, folks, this is being broadcast live on the VectorVest YouTube channel. So as you see on your screen, please make sure your computer speakers are turned on to hear the audio portions of the webinar. And the recording of this webinar will be available shortly after we're finished. All right, so let's see. Let me just take a quick look here and see who we have in the room and from where. So it looks like it looks like we have Badger in there. Good morning to you. There's Larry. We've got Gil from Montreal. Let's see who. I'll name just some places here too. So we've got Naples in the house here. And what else do we have? Good morning from Canada there. There's the Phoenix 19501. And there we have Jerry from Boston. We've got Palo Alto, California. There's Marguerite from Oakville, Raphael from Calgary, Amir from California. So we have a few then from California. Now I'm looking for across the pond if we have any folks. There I'm seeing Kitchener, Kauai, so across the other pond. There's Spain, so we have Spain in the house. There's Alabama, Chattanooga, Tennessee there, Buffalo, New York. All right. Haven't seen anybody from the land down under yet, and usually we'll see a few from there. So if you're in the house, let us know. But folks, once again, showing how much of an international group this is. There's Texas in the house as well. Bommy Whitby. Bommy Whitby. I know that, who was that? E Pavone 100. So I can tell you, based on this, folks, let me just bring this over. Where I am today is cold. All right, this is degrees Celsius. You can see minus 20 feels like minus 32. So let's just hit the little arrow here and switch it to Fahrenheit for those operating on the Fahrenheit scale. And I still like to do stuff, quite a few things more on the standard side of the house than metric. But here you can see minus 4 feels like minus 26 if we're talking Fahrenheit. So cold and windy. Steve was mentioning, Steve, and it's Joey with us here, folks, today. So feel free to say hi to him as well. It's pretty windy down in North Carolina for them. All right, there's Bruce Stewart. So we got Australia in the house there. And I know I've missed a lot of people there, folks, but we do have a lot to cover. So let's continue to motor on here. Here is the risk disclaimer. So as usual, folks, everybody knows there is risk in investing. Everything you will see here today is provided for educational purposes only and should never be considered as investment advice. The information is designed to empower you to make your own investment decisions, and these decisions are yours and yours alone to make, just like ours. All right, here's the agenda. So once again, my pleasure, folks, to be able to host this event. You can see that we will be doing the global market review, and well, I won't do it yet. I'll do it right before we start that. So we'll do the global market review, trade ideas, and then our keynote presentation, folks. This is going to be a great one. Everybody knows I love my commodities. So we're joined by none other than Mr. Steve Chappell, Director of Trading Systems Development, the steady hand on the tiller in the Jockey Club, that I'm sure everybody knows. His keynote presentation will be entitled Golden Opportunities, How Precious Metal Equities Can Strengthen a Diversified Portfolio. So we're going to cover all of that before adjourning for the day. Once again, you can see the replay because this is broadcast on, whoops, wow, mouse is sensitive there. Because this is broadcast live on the YouTube, VectorVest YouTube channel, it'll be available there shortly after. All right. So right before I'll bring up the global market review, but I'm going to bring the US software over here. And I was talking to Steve before we started, Steve and Joey, about, wow, you know, we saw the confirmed down signal come in on Thursday, and we are ready to get into the depths of despair. And look at the market action on Friday. We're looking at the Dow Jones up to just shy of 2.5%, the Nasdaq over 2%, the S&P 500 just shy of 2% there. The Russell up over 3.5%. And there you can see the VectorVest composite was up over $1.82, 2.32%. If we go down and take a look at the VIX, wow, the VIX got the tar knocked out of it, at least on a one-day basis, down 18.42%, down to a little more respectable 17.76. All right, so quite a day there that ended up changing some things that we'll end up seeing as we go through the global market review. Now, we're all going to wait for Monday to see if we get follow through to that day, because it was a big down day the day before that. All right, so let's start getting into things here. So here, folks, we have the January returns for each of the countries. So everybody was able to eke out a gain in January, and if we follow the almanacs and past years, January is supposed to be a setup for the rest of the year. But you can see that the commodity heavy nations like Canada and Australia ended up suffering a bit. You can see Canada just able to put in a 0.04% gain. The US leading the pack, 3.33%. You can see Australia at 1.75%, and then the European Union at 2.58%. But now look at the year to date, folks. And it really tells you the beginning of February, which is typically the weak link month and the strongest 6-month period, really kicked off not in the best way and was kind of back and forth. So you can see year to date, Canada sitting at 0.88%. The US still able to add more from the January gain, 4.66%. Australia down 2.15% year to date so far. So they basically lost all of January's gain and a bit more. And then the European Union, you can see, lost a bit down to 2.01% year to date. All right. So let's start here. Here you can see the Canadian color guard. And we're going to see a common theme here. Todd Schaefer likes to call it, when we see all the colors in the color guard, the Christmas tree color guard. So we're going to see a lot of that. We're going to see a lot of RT Kicker confirmed red lights in some of the countries as well. All right, so you can see with the Canadian guidance here. We've got the market timing gauge needle one tick into the green on Friday, and guidance that reads the color guard is mildly bullish. VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. If you saw the guidance the day before, it would have been quite different, because you can see overall here. Look at some of the gains on Friday. RT ticked up. You got 4 ticks from 1.01 to 1.05. Look at the BSR from 0.84. It had gone from 1.46 down to 0.84, jumped back up to 1.27, and actually got a green light because it was up day over day and week over week and above the value of 1. You can also see MTI kicked up Thursday to Friday from 1.03 to 1.07. But the big news was we got enough of a market move on Friday to change the primary wave to up. So you can see the Canadian market move from a down up to an up, short-term uptrend in an underlying uptrend. The good news in all of the back and forth market action is the underlying trend was never lost. Closest they got to was 1.03 on Thursday. All right. So here you can see that 0.88 year to date gain. And if we take a look at the summary of our proprietary market timing signals, you can see this is how things shape up in Canada. Confirmed calls remain up, have been up since the 2nd of December. The DAW turned down on the 30th of January. Green light buyer turned neutral on the 27th of January, and the primary wave turned back up, as we just mentioned, just on Friday on the 6th of February. All right, moving into the US. Here you can see the US market timing gauge needle also one tick into the green, guidance that reads the same as Canada. Color guard is mildly bullish. VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. All right, and notable here, you can see the Christmas tree effect with the U.S. color guard, and you can see how they were coming from RT Kicker confirmed green lights back here, transitioned into yellow and then reds very quickly. Another bit of a move into yellow before the red light started ticking back in. So the U.S. had three red lights across the board on Thursday, and then we're able to put in a green light in the buy to sell ratio column here as well. The buy to sell ratio in the US going from 1.04 on Wednesday to 0.76 Thursday, back up to 1.09 on Friday. And look at the move in the MTI day over day. Well, those 3 days alone, 1.11 to 1.02, then back up to 1.10. There you could see the big news. The U.S. did get the confirmed down call on Thursday. All right, so that remains down. However, they did get the primary wave turning back up and had never lost the underlying trend, got close, 1.02 there. So back in an up situation in the U.S. market. And as we mentioned, we'll be looking to see if we get follow through to that big move that we saw on Friday. All right, here's the summary of the market timing signals on the US side. Well, there's the 4.66 year-to-date return. And we can see there's that confirmed call turned down on the 5th of February. DW did turn down but came back, turned back up on Friday, the 6th of February. Green light buyer, neutral on the 6th of Feb. Primary wave turned back up on the 6th of Feb. Quite a day on Friday. All right. Now here's Australia. Color guard. So we mentioned Australia with a loss year to date so far. I'll put that one in there now. There you go. And there you can see big difference here. A lot of red lights. 3 RT Kicker confirmed, RT Kicker combo confirmed red lights in a row in the Australian market. And look at where their BSR is. Their BSR is already down, and it came from, what was the high? 1.58 on the 27th of January to 0.19. So bottoming levels in the Australian market for the BSR. Their MTI looks like it hit a high in around 1.26 back on the 27th as well, down to 0.82. So not down to that 0.60 and below level yet. But you can see that for Australia, they got the confirmed down signal on Friday. Unfortunately, they were operating before everybody else and were done trading on Friday before we started. So they weren't able to catch any of that move. We'll see what happens when the Australian market opens up before everybody this coming week. All right, so confirmed down there, you can see they were already in a down situation, so short-term downtrend in an underlying downtrend. And of course, folks, we all know you do not want to ignore those confirmed calls, all right, especially the confirmed down call. And taking a look at market timing signals, there you can see nothing but red, unfortunately, for the land down under. And I have more to mention when we get into the central banks on Australia as well. But you can see confirmed calls did turn down on Friday, the 6th. DW turned down on the 2nd of February. Green light buyer red on Friday, the 6th. The primary wave turned down on the 30th of January. Here's the European Union to round things out. Market timing gauge needle straight up into the yellow on Friday with guidance that reads the color guard is neutral. VectorVest does not advocate buying any stocks at this time. I guess I missed the market timing gauge for Australia, but you can see it's 3 ticks into the red. Guidance color guard is bearish. VectorVest does not advocate buying any stocks at this time. All right, so close other than the bearish to the neutral going to the European Union here. And there we can see still quite elevated levels for the indicators here, especially the BSR in Europe. You can see their BSR ticked back up from 2.89 to 3.22 Thursday to Friday. RT was flat, 1 point ticked up here on the MTI from 1.38 to 1.39. They're in a down-up situation, short-term downtrend in an underlying uptrend. And you can see when we go here, they've been able to maintain the confirmed up that turned up on the 3rd of December last year. All right, DEW turned down on the 5th of February. Green light buyer, neutral since the 27th of January. Primary wave turned down on the 29th of January in the European Union. All right, so that's the color guards. Let's jump quickly here to the market timing graphs. So on the Canadian side, just quickly, you could see that all of our proprietary market timing indicators, as we saw on the in the color guards, all operating above the value of 1 again with that big move on Friday, bringing the buy to sell ratio back above. And really the Canadian market sitting right up against, so they closed with a Maribozu candle and closed right up against resistance that has been tested just in the last week, has been tested a number of times. All right. They happen to be right in amongst the 65-day moving average here as well. All right, so literally the last 2 candles are pretty much touching both support and resistance. So pretty critical levels that we're sitting at to see whether they're going to hold. And like the US, strong day Friday, we're going to have to see if we get follow through to that move on Monday. Right, you can see the confirmed calls there. You can see the confirmed call that's still up in the Canadian market here as well. Here's the US. So there you can see that big move on Friday, 1 white soldier bullish candlestick pattern. We'll be looking to see if we get follow through to that. And they basically were finding support right around the latest pullback. All right, a little bit of a fake breakout Thursday or breakdown below that kind of touched the zone here, this support zone right there. But big explosive day on Friday, as we mentioned, that brought them fairly close to overhead resistance from the previous swing high. There you can see how their market timing indicators are looking. Here's Australia. So Australia, you can see how they've been moving down, and right now, Friday, they touched critical support here, and so far we're able to bounce off of that. All right, but that's 451, I believe, that area, or I think it was 440. Yeah, I don't have that there. All right, but whoop. Drag that over. All right, so this is going to be critical. You can see how it was resistance back here, ended up coming into support right there, and then on Friday once again. All right, and you can see all of their indicators operating below the value of 1. Here's the European Union. So European Union, all of their market timing indicators here operating above the value of 1, as we saw. And they too have been, for the past week, dealing with support at this level along with the 65-day moving average. And you can see how the absolute line was pretty much touched the last 2 sessions. All right, so they're looking to see if they can find support at this level. If they can and bounce, you can see where overhead resistance is and where their next level of support is if they should break down here. All right, that takes us to the global markets tracking ETFs, these found in the US software. Uh, Here you can see how we reviewed last on December in the last international forum. There's how everything played out there. Now, January, as a basket, out of the 43, we had 42 winners, one loser, and as a basket, they were able to put together a 6.09% return, outperforming the VectorVest composite, which was 3.33% in that same time frame. There's been a few changes in the overall here, but you can see South Korea, Turkey, Peru, Brazil, and Chile rounding out the top five. And then you can see Greece, Hong Kong, Netherlands, Mexico, Israel rounding out the top 10. Top gain going to South Korea at 25.91% in January. All right, so pretty good moves there overall. And if we look at the global market tracking ETFs, January, so the slide on the image on the left is the January picture that we just talked about. So year to date, as a basket, we can see 41 winners, 2 losers, and you can see that they pretty much line up. I guess there has been a little bit of a shuffling of the deck here. You can see South Korea, Peru. We won't blend those two together. Turkey, Brazil, Mexico, rounding out the top 5. And there's South Korea able to put in a bit more gain. End of date here going 28.28% return. All right. As a basket, 7.54% for this group, and that against the VVC, which put in a 4.66% gain in the same time frame year to date. All right, so that's the global market tracking ETFs from the US software. Here's the market sector ETFs also from the US software. So 2026 year to date, we've had a changing of the guards for the first part of this year, folks. As we know, miners and metals and mining were leading the way through 2025. You can see with the back and forth auction in January, they have dropped down, and one of the things we saw was oil, which had stayed range bound for quite some time, really started to move. So you can see now out of this basket of 30, we've got 24 winners, 6 losers, and you can see oil services, energy select, the top 2, followed by metals and mining, solar, North American natural resources, rounding out the top 5. You can see oil, gas, exploration and production, home builders, regional banks, materials, and gold miners, rounding out the top 10. All right, as a basket, 8.49%. And once again, outperforming the VectorVest composite at 4.66%. You can see oil services putting in 28.91% gain so far year to date. If we look at those same ETFs, but from a 10-day delta perspective, this is how it looks. So there you can see telecom in the last 10 days, just shy of 11%. So they've really started to move. You have regional banks in there. There you can see oil and gas, energy select, and oil services rounding out the top 5, all of them 8% or greater in the last 10 days. So oil's been on the move once again. All right, central bank rate announcements. We closed out January Of course, we know how that played out. We had Japan hold. We had both the U.S. Fed and the Bank of Canada. They held as well. All right, so those were the main ones we were interested in tracking in January. Now, looking ahead to this month, February, it already kicked off. You can see all the main announcements there. The main ones we're interested in here have all reported already. Basically, the Reserve Bank of Australia kicked things off on the 2nd of February. Unfortunately, they got a 0.25% increase in interest rates due to what they called unexpected rapid increase in inflation. So 0.25% increase there. I was wondering how that was going to play out with the Bank of England and the European Union. However, you can see both of those held, as well as the other players that came in on the 5th of February. So with the rest of the list, folks, the most important one for us will be Wednesday, February 18th, not an interest rate decision, but the FOMC meeting minutes. That'll come in on that date. All right. So US Fed won't be their next interest rate decisions coming up in March. So we'll see how that plays out there. All right, so that's the roundup of the central bank announcements. Here are the essays from around the VectorVest world for this week. Another excellent week of essays here, folks. And you can see just a summary of all of them here. Out of the US, Angela Akers wrote one entitled Be a Well-Rounded Investor. So how to use VectorVest to profit in both rising and falling markets. Out of Canada, Don Reitzma wrote one entitled The Long-Term Winners for Conservative Investors, How to Use VectorVest to Outperform the Market with the Long-Term Winners Trading Systems. From the European Union, Susan Hayes Culleton wrote one entitled Save Like a Pessimist and Invest Like an Optimist. All right, so how to use VectorVest to help invest in high VST and high RS stocks to invest like an optimist. And then from the land down under Australia, Robert and Russell Markham wrote one entitled Has Silver and Gold Been Oversold? So how to use VectorVest to further evaluate the prospects of silver and gold moving forward through the performance graph feature. And I think the last three essays, Russell has kind of been taking you down the performance graph feature to compare Bitcoin to gold, silver to gold, and then, taking a look at what's happened of late. All right, so all of the essays there, folks. Hopefully, you've been able to check out at least some of those. I know we're early into the weekend here already. So if you do see something else that interests you there, just know that either through VectorVest 7 or the mobile app, you can get into the other countries. So if you're using VectorVest 7, you can log into any of the other countries by choosing their flag at the login screen. Then go into the Viewers tab and go into last Friday's views to check the essays there. All right. So that's the roundup there. Here's the February almanac. So in the last 30 years, the price of the VectorVest composite has gone up 16 times with an average gain of 3.71%, down 14 times with an average loss of 3.61% in February. So we have a 53% chance of a win. All right, and as I mentioned earlier, according to the Hirsch and Mistel's 2026 Stock Traders Almanac, February is the weak link in the best 6-month period that began in November. All right, so we'll see. It's kind of a mixed bag how it's playing out so far. Not good, obviously, in the Australian market, and a lot of back and forth in the other markets. So we'll see how that plays out. Here's the earnings update from Angela's essay in the US software. So according to FactSet, and we're in Q4 2025 earnings season right now, 59% of the S&P 500 companies have reported their results. We have 76% beating earnings estimates and 73% beating revenues. All right, so that brings us to trade ideas here, and we kind of have a combined effort between myself and Steve. I'll be talking commodities here, as Steve will be, and as we've done the last couple sessions, I figured with commodities moving the way they are, not always in the direction that we want, we should take a look at that. I just wanted to hit on some of the main things going on in the current economic environment that are we're seeing play out in the commodities markets as well. So we have the overall increase in government debt levels, the overall state of fiat currencies. Um, we've got the US dollar continued status as a world reserve currency, whether that's going to continue on. And what I think they've been doing a fairly decent job of trying to hide from us for quite some time, folks, is the job loss announcements. But these job loss announcements are starting to pile up. Uh, Here I've got a slide from one site that's just kind of recapped the main ones that have come out just in the last few months. So both 25 and 26. You can see UPS, 48,000 jobs in 2025, already announced 30,000 more cuts for 2026. Most likely everybody's heard of Amazon, 14,000 job cuts just a few months ago in 2025, announcing another 16,000 in 2026. And then you can see some of the other players in here, Intel, Nissan, you can see the numbers quite large. Obviously, most of these global companies. So these would be global job losses in a lot of cases. Microsoft, Verizon, Bosch, Dell, TCS, and on that site they continue down a list of more companies and their announcements. When I did a quick search around, I could find pretty much the same news no matter where we go. We do know that the US had a pretty big call in the last year from the Federal Public Service there. I thought I'd share with everybody what I found just on the Canadian side, and I've seen the same thing on the Australian side. The European Union is a little bit harder to track because you have to get down to each individual country there. But here, just on the Canadian side, this is federal public service job cuts just since the budget that came out November of 2025. So we're looking at 22,723 breakdown by department is what they've shown here. All right. So all of that backdrop, we'll see how it plays out as we go forward. But I'm going to jump in and bring over my graph from the US software here, and we'll take a look. I'm going to take stochastics off here. We'll take off earnings. These are all ETFs we're looking at here, folks. So these are the ETFs we use for trading different commodities on the U.S. side, typically, and we're looking at these weekly during the weekly market update as well. So you can see here we've got GLD for physical gold in the U.S. market. Let me take off last close. And I've got the near perfect indicator graph layout on here. All right. So we can see from a near perfect indicator perspective, well, things were rolling pretty good. And at one point, folks, I was pointing out that we did have some bearish divergence going on with GLD, with gold overall, as price action was continuing to put in higher highs. For a period of time, you could see that that wasn't happening with the 5 moving average of RT. However, you can see when it did kind of explode here, and when you look at how gold was moving up, you can definitely see that melt up move at the end, where you see gold really start going more parabolic here. A bit of a warning sign there with the warning that we had. Now, they were able to bring in a higher high here eventually, but that was right at the top before gold pulled back. Now, interestingly enough, we did have a first level of support that we were kind of looking at on GLD at 464. And it was able to gap down, actually opened right at that level. That was last Friday, or a week ago Friday. All right. And then came right down to a level of support that we had pegged. There was some consolidation in here, a gap up at 426.75. They were able to find support there, came back up after the big pullback, and you can see came right back up against what is now resistance here at 464.45. And that's kind of where they were bouncing mid-range there in between those levels as they try to see if they could take out resistance there. You can see pretty good green candle. If we go to 6-month look here on Friday, but a lot of back and forth, a lot of volatility. And you can imagine there are going to be bag holders that were just buying in up at these levels here, folks, as people were getting more emotional. It's the emotional trading that typically will start sending things more parabolic. And that's what you saw happening near the end. Of course, we know that commodities typically run late market cycle, and silver usually runs later than gold. So we've kind of seen all of that play out before we got the pullback here. All right. Now, while trigger was lost from an NPI perspective, you can see trend is still intact. And if you were to look at the Huey, the bullish outlook on the Huey is still intact there as well. So we'll have to see how things continue to play out here. But that's the picture on GLD for now. Here's GDX for the gold miners. From an NPI perspective, you can see with that big pullback loss trigger, the 5 moving average RT has done a sharp hook here and turned back up, but does have a bit of distance to go to try to cross the 40 again. Still have trend. And with GDX for the gold miners, there you can see the swing high right in around that 112.38 zone. They pulled back. We had support here at about 98.10, that zone there, and you can see that it actually came through, tested this overall zone here of 88.49 before bouncing both sides. So they're dancing around both sides of 98.09. So we're looking at that as resistance, and pretty much it looks like the wick came up to the absolute line on Friday, closed a little bit below that. So we'll have to see if we get follow through there, continue to move up. If it does, we can see if it'll take a run at previous swing high here. I missed my dashed line there. There you go. In around that 112.38 level. All right, here is SLV for physical silver. Wow, look at the 5 moving average of RT there. So from an NPI perspective, you can see trigger was lost, trend still in play. Now, SLV pulled back, looked to see if it could find support around 73.74 in the more extreme pullback. And you can see, looked like it was finding it there, started to bounce, came up against resistance here at 84.60 before being repelled, had another gap down, and look where it gapped down to. Another level picked out here at around 65.60, and that's where it's trying to bounce from on Friday. All right, so silver at least has kind of done what gold didn't, and after the initial bounce from support level did end up moving lower here. All right, So you can see now everything from 73, 74 above is going to be resistance if it's able to move back to those levels. All kinds of reasons, folks, given for the pullback, that sharp pullback Friday. I'll leave, whether you're believing some of those reasons or not to you. But there's a myriad of reasons, including, the main one in the media was the announcement of Kevin Warsh as Trump's nominee, not appointed, nominee as the next U.S. Fed. All right, me personally, I'm not buying that story, but that's just me. All right, so here's that's SLV for physical silver. Here is CPR for copper. So given the last couple of graphs, this one's almost looking like a ruler stock over the last few weeks. It's still range bound here. But here you can see from an NPI perspective, you still have a trend in play. You did get a trigger breakdown right here. All right. And really with copper, other than, this outlier candle on the 29th, for the most part, they've been kind of range bound, above this 36.66 level, and just below the 35.72 zone. And you can see on Friday, between Thursday, so Thursday they came down below 35.72. Friday opened up right on the line, and a nice open green candle there. So they'll have to see if they can challenge resistance here at 36.66 before being able to move higher, if that happens to be in the cards for them. All right, but they've had pretty good run up here as well. Let me take it back to a year there. All right, here is, I think I missed, I'm going to skip, how are we looking for time? I'm going to skip, we can do this quickly. I've got the wrong one there. Yeah, I'm going to skip that because that should be Euro. Euro is the Canadian ETF for uranium. Where did XLE go? I missed it. All right, so I'll get those ones in there. Euro for uranium on the US side and LIT for lithium. All right, here's XLE. So we saw this one when we were looking at the sector ETFs for the US. So from an NPI perspective, you can see that you've got trigger, you've got trend. I mentioned how, in amongst all of this precious metal noise, energy really started taking off. See some consolidation back here, December leading into January. There was actually a wider channel and a narrower channel that XLE had stayed in for about a year, a bit more than a year. We were tracking through there. And then right back here in January, they came right up against 47.12, which was the upper end of that channel. And you can see they broke through, were able to break through. They did retest, kind of consolidated along there before taking off, and then consolidated in along 49.91, that zone there, before moving up. So you can see now the candle's starting to get a bit bigger. So keep an eye on, whether we're looking at this one going a bit more parabolic here as well, and whether we're looking at an exhaustive move coming into play. All right, but right now, after the last move, we're looking at, looks like 49.88 as a good level to look at, first level of support on any pullback here. You can see there was consolidation along that line as it broke above. All right, so that's XLE. Here's Euro for uranium. So there you could see, of pullback there as well. However, from an NPI perspective, still have trigger, still have trend in play, and they ended up pulling back to a support level in around 50-60, that zone there. Kind of broke down Thursday below that, but back up above it Friday. Overhead resistance at around 56, 58 before going after previous swing high there as well. All right, and then there's lithium. So all of the commodities have been moving. The ones that weren't joining gold in the beginning eventually did. Let me take off a few of the lines here. Although this one, a good example, maybe I'll add it back in there, where you can see here price action continuing to put in higher highs, whereas that 5 moving average of RT putting in lower highs here. All right, but on the pullback, lithium did come back to, so LIT for lithium in the US came back to 67.98. That overall support zone there, was able to find support there on Thursday, and attempting to bounce off of that level. Previous swing high sitting here right in around 75.40. All right, so that's it for that. That brings us back to the slides, and that will bring Mr. Steve Chappell up, who's ready, willing, and able to carry on. Hey, Steve.
Hey, Rick, thanks for the warm introduction. Did a great job, as always. And I'm delighted to be with all you folks again today. I cherish these opportunities. It's been quite a journey here at VectorVest now. My goodness, it's going to be 25 years in October. So this is a important year from that perspective. Never thought I'd work at a place for 25 years. And here I am, So it's been fun, it's been informative, it's been lucrative, it's been all of that. And any chance I have to give back to our subscriber community, I certainly, cherish those opportunities. So yeah, we're going to be talking about gold and silver still today. I truly believe that there's a lot of potential upside still to come. And I think there's probably some good upside in all the commodities. And Rick was laying out some pretty good information on all of them that you saw there. But we're going to focus specifically on gold and silver today. At the time that we scheduled what we wanted to talk about, gold and silver were still on quite the tear. It's not surprising, I don't think, to anyone to see that we've had a little bit of a pullback. Well, a little bit of a pullback, more of like a coordinated effort to bring prices lower, because you don't drop commodities by $55 an ounce, for example, without some effort in a couple of days. But having said all, we don't need to get too far into that. What we need to realize is, are there opportunities still to come? And that might be shocking to some, particularly in, say, the silver arena, where a lot of folks are probably still all hung up on Hunt Brother, type historical relevance pieces of information. It's a completely different situation that we're in now. So we're going to be talking about, I could list more. I sort of got tired, as I told Rick, listing out all the reasons why I think still considering investing in gold and silver is a good idea. Persistent inflation and currency debasement being the number one reason listed. Even recently, we saw in Australia, they raised rates based upon unexpected inflation rise. We've seen with our latest inflation reports here in the States that they're starting to tick back higher. And even as late as last week, you have Trump saying that with war, she's going to be lowering interest rates into that environment. We'll see if that happens. That's May. That's like a lifetime from now, it seems. But yeah, all of that tone even leads itself to higher gold and silver prices, or at least gives the buoy and kind of sets in a floor for gold and silver. In terms of the unsustainable global debt, It's easy to talk about here in the States. I mean, ours is to the tune of $38 trillion. Just servicing the debt alone now is more than the defense budget, or at least has been, or will be, And so, when you start thinking about that in those terms, I can see why that there's an effort to try to bring interest rates down, number one, but number two, things are going to get, a whole lot more difficult as time goes along here. So I just think that there's a long runway potentially for gold and silver and other metals and other commodities, given that situation. Central bank accumulations. Let's be honest here. The silver market in particular is seeing deliveries to the tune of which they've never seen before. And these are not mom and pop operations. These are not even small brokerages. These are, these are not money management firms. These are sovereign nations. That, BRICS obviously being a backbone of some of that, I'm sure, but just in general, I'm not sure that it's totally isolated to the BRICS, nor should anybody probably feel that way either. So, the central bank. Yep.
Steve, just wanted to mention, as you're going over your points, you're going out over your points from the slide. You probably just want to share your slide.
Oh, I haven't shared it yet. Yep. Thank you.
Yeah, so the folks can see.
Yeah. Many apologies for that. So hopefully Joey had the screen on me at least while we were going through that. But yeah, that's certainly a big one. Number 3 is what we were just talking about there. So we've gone through the top 3. Number 4, geopolitical uncertainty. I don't think that any of us are unaware that geopolitics right now are bursting at the seams as well. Everywhere from Ukraine to Iran to, all different kinds of, situations. We're talking about Greenland. We're talking about Cuba. We just had the Venezuela incident. So those kinds of things also buoy gold and silver prices. And there does not seem to be any end in sight on many of those fronts, even now. In fact, tensions are kind of picking up, is how a lot of the news is being framed right now. In terms of limited supply growth, a lot of people don't realize this, but silver has been running a structural deficit for 5 years running. And with the new industrial demand, which is the next bullet point, that puts them in a very difficult situation to have enough supply for the demand that has now been generated. And that's both through the AI build out expectations along with new discoveries that are being made along the way. I'm not sure how many people have ever heard of Samsung, hopefully quite a few. But they've developed a new solid state battery that if any of you are Tesla owners would be pretty cool, because you'd be able to charge your Tesla in less than 10 minutes. About 8 to 9 minutes flat from 0 to 100, and also get about 20% more range. And the way that you do that is with a solid state silver battery. And so silver is the strongest conductor of electricity. Of course, as silver prices continue to rise, maybe copper becomes more interesting. We'll see. But that's a reason for other metals to keep going if you get the drift, hopefully here. So it's all a part of this, the world wants to go electrification. That's what all the officials are telling us. That's what all the nation states where they want to try to head. This is, some of the ramifications of that, right? All these rare earths and critical minerals that are going to be involved in that build out. And so that's where the real, as I look at all the geopolitics that's going on, you might imagine you put one and one together. A lot of this is centered around, those critical minerals. When we look at number 7, historically cheap valuations, that's really in relation to stocks. I mean, just look at the stock market. Palantir's trading at what, still $160 maybe? I don't know. I don't own that one. But I mean, they make like $1.40 a share in real earnings. You've got Tesla trading at 400, and their earnings per share on a forward basis is now also less than $2 a share. You got stocks trading at astronomical numbers based upon stories and robots and electrification and things that are coming, and certainly some of that is to come. But also a big premium is being put on that, as we stand here today. And basically you got NVIDIA kind of loaning out the money for all of it to stay on track. So it's a very interesting dynamic that we're in. There's an awful lot of stuff going on. And I think just when you say that, there's an awful lot of stuff going on that leads to uncertainty. And I think that's the big key takeaway is there's just a lot of uncertainty out there. There's uncertainty about where we are. There's uncertainty about the future. There's uncertainty about how we're going to get there. There's uncertainty about who's going to win, and all of that. And so in a world of uncertainty, gold and silver have always been really good bets. Now, as silver prices have caught up, a lot of the way that I've thought about this is moving more and more towards gold as we go along. But having said that, there is no way that I'm getting rid of exposure to silver, because as I just laid out, that's where your real structural deficits and where some of the real build out for the future is going to be located, is in that arena. Okay. Now you might say, well, all they got to do is strike up some new mines. Many people might not realize this, but most of the silver mined in the world today is actually a byproduct of mining everything else. There's only about 10 real true silver miners in the world today. And it takes, as you might know in Canada, for sure, it takes a long time to get a mine online, right? So you're looking at continued structural deficits just with the current state of affairs for at least the next 5 to 10 years. Okay, so given all of that, let's look at two things that I think are most important now. One, the bottom line: gold rises when people lose confidence in paper promises, which I think we're starting to see in action. Number two, silver rises when monetary stress meets real world demand. That demand is real. This is not a Hunt Brothers situation. This is part of where we're trying to build for the future. And so what we got to know now, ladies and gentlemen, is we got to know when to hold them and know when to fold them, as old Kenny Rogers used to say. And so when we get a feel for when to buy, when to sell, we also then want to know what we want to be buying. And that's going to be preferring smooth, steady earnings and growth patterns with explosive acceleration as the gold standard. And so I'm going to show you what I mean by that. But this is, if anybody in here is in the Jockey Club, you see me do this on a daily basis. We made about 40% a year last year doing exactly what I'm about to show here. And a lot of that was in gold and silver stocks. And they say the proof is in the pudding. So I'm going to take you over to the current portfolio that we're in right now. I'll show you that I'm not just blowing smoke. I did buy another gold stock as early as just Friday. It's kind of lagging behind because I went super aggressive on some of the other ones. But the point is, you shouldn't load all up into gold and silver, but you do want to think in terms of owning maybe several positions depending on your portfolio and size. So JP Morgan has given us some guidance on that themselves. Not that, they're the gospel on this or anything like that, but you're seeing more and more folks leaning towards 10 to 20% portfolio value in gold and silver positions. You're seeing an awful lot of banks, even Citigroup recently, elevating potential silver prices even to 150 an ounce over this coming year. And we're seeing gold expectations in the neighborhood of 6,000, and they're just going to keep revising them up as we go. That's what they've been doing so far, right? So, all that being said, you want some exposure. I'm going to leave the final numbers up to you. I'll tell you personally, I've gone to 33. And I started doing it about 5 or 6 months ago, and I have no intention of pulling out of any of that exposure for me personally at this stage. But, that's pretty aggressive. But that's kind of where my head is based upon what I've just discussed and what I see happening and all that stuff. But somewhere in there is the truth, 95 and 5 or 66 and 33, or somewhere in between is usually the right number for most people, right? But no exposure, I think, is a mistake. I think that's the main message, is no exposure is certainly a mistake. And so let's look at some of the most recent trades, for example. You might say, well, this has been a pretty rough month. He hasn't been making money with gold and silver stocks this year. There's no way in heck, right? Well, let's take a look. We're going to look at trade history here. The top one. Now, we like to, when we take positions off the table, a lot of times we end up splitting them in half. We take half off to kind of lock in profitability and give us some breathing room, and then let the other half, the balance, run if we're still showing strength. So we didn't end up getting all that much more out of TRX, and I wish I would have got a lot more. I'm going to show you that chart in a minute. Dr. David Paul once said, all trades end badly, even the good ones. So 39% was bad because I could have got about 120%. And if I'd have stayed all in, okay? So all trades end badly, even the good ones is a good quote to remember. That was a gold pick, 22% this year from 15th to the 22nd. Hecla Mining, silver play, 20%. Sabanye, 7. China has completely locked down antimony. I don't know if people are as familiar with antimony as you are with, say, gold and silver. Antimony is a requirement to, say, manufacture bullets. It has heavy defense critical mineral. Okay, they are the only one in our hemisphere, in our side of the world, that manufactures antimony to any notable degree. Okay, so that's an interesting stock just to remember, is this U.S. antimony, and kind of keep that in circulating in your picks. Here's Pan American Silver. Here's just silver itself. We slipped a micron in there. We did find something besides gold or silver. Here's the other half of that silver trade, the other half of that new gold trade, the other half of that Pan American silver trade, the other half of that UAMY trade, junior silver miners. Here's Aurora Minerals, another gold stock. Here's, hopefully you get the picture. All right, so I'm not just some guy on here telling you that there's profits that can be made in gold and silver and not knowing what we're talking about. I've been doing it for 6-7 months now, straight, basically, okay? And intend to keep doing it. So let's show you how. That's the next thing, is show you how, right? What are some of the common characteristics of the things that we've been picking, how and why? And give different strokes for different folks. As you saw, the durations on a lot of those percentages there were trading durations, 5 and 6 days, sometimes a couple of weeks at a time if you were lucky. It's not a bad way to go, particularly when things get more volatile as they are these days. But some folks, you're just not equipped for that. And so there's a few ways to go here. 2 real ways: invest or trade. Right. And so let's talk about that a little bit. Now, Rick's been doing a good job laying out some of the charts. Looks like you guys are going to be looking at, things like the Huey and SLV and GLD on a pretty regular basis. So that's good. Let me show you a couple of things that we're looking at, that I'm just going to recover some of that ground and kind of lay some groundwork for food for thought for the gold and silver prices to come off what I'm seeing right now. So number one, this is the Huey, okay? So with the Huey, you seem to be familiar with the layout, but because we always might have some new folks, I always like to explain things all the way down the rabbit hole, just in case some aren't as familiar. So Huey is the Gold Bugs Index, which is a look at the miners, okay? Now, when we it's a little different than, say, the GDX or that kind of thing, but it's just another way to look at it. Now, what we have on the price chart at the top, we have 2 averages. We got a 10 and a 65, and those are of stop price, STOP, okay? And so what we want to see is we want to see the 10 above the 65. On the bottom graph, we don't just have plain old RT, we have a 40-day average of RT, okay? And so it takes a little bit more work and a more systematic work and movement for RT, to get all the way above 1. But we also slowed it down for another reason, and that is that, at least historically, you don't see it as much on this chart right now because prices have virtually gone straight up. But historically, the Huey had inherently a lot of volatility, a lot of back and forth, a lot of noise, if you will. So a lot of these averages come from what used to be inherently a very noisy index. And you're starting to see some noise creep back in spurts anyway, recently. So it should bode well for us in the future. But, what we have right now, there's no reason to be panicking about gold and silver, at least as of yet. The other thing I would say, just quickly, is you cannot ignore market direction. I don't think even given the new circumstances and reasons to be thinking about gold and silver that we laid out in the beginning, particularly with miners. At the end of the day, miners are businesses, they're corporations, they have expenses, they have failures, they have, all the different kinds of things that can come into play. So one thing I would say is you've always got to, oops, I went climate. You've always got to pay attention, to the market timing graph still. And I pulled out of some of our minor trades because we were heading into that confirmed down. And the reason I did is when markets are in turmoil, gold and silver are not immune, okay? So if we go back to COVID, for example, gold and silver dropped just, pretty much on par with everything else. Now, the one thing that didn't happen to gold and silver is they didn't get devalued like the dollar did for the next, how many years has it been since COVID? So 6 years now, whatever it is, so I'm not getting into those nuances. I'm getting into the direction, right? So I would always, if we get into a confirmed down, still treat these miners, these stock mining stocks that we're going to be talking, or gold and silver mining stocks that we're going to be talking about, I'd treat them the same as I would any other position, whether it's, NVIDIA or anything. So I don't think you can ignore market direction is basically what I'm getting at. 2022 was a horrible year for everything but oil. We made so much money in oil stocks, it was ridiculous, but everything else was the pits, including gold and silver. Okay, because that's when the oil shocks were coming in. They were saying oil was going to hit 150 a barrel and all that stuff, right? So just kind of keep that in the back of your mind. I don't think that you can look at one thing exclusively. I think you need to stay in tune with both. You ultimately you want to see that the Huey is bullish, and you want to be in a confirmed up or bullish on the market from VectorVest rationale when you're long your gold and silver stocks. The exception being, like with any other position, including NVIDIA and things we would say normally, unless you're going to be using options, as a way to hedge against potential downside. When we get into a confirmed down, right? You can do that the same way with these gold miners, and I think it could be a good idea, depending on how things go. So just kind of bear that in mind. I don't want to get too beaten down into that, because what I want to try to spend the most amount of time on is just helping you pick some of the better potential ones that are out there, and then give you the opportunity to maybe ask a couple of questions should you folks have some after I show it. So step one, if you're interested in gold and silver stocks after all the things that Rick and I have said, check the Huey, make sure you're bullish, keep coming back to the coaching, make sure we still like what we see there. And then also make sure that we're bullish on the stock market, just in general, okay? The good news there that a lot of people don't realize is that even though we're expressing some negative concerns about the potential for rising inflation and things of that nature, okay, earnings are still, as Rick rightly pointed out in his slide set, earnings are still doing pretty well, better than most people would have expected. Now, the one thing that you don't see there is that they have decelerated a little bit. All you see is who beat estimates and what that percentage is. Well, the estimates could have come down, so there is a little bit of a slowing that had been occurring. Now, recent reports have indicated that may no longer be the case. So that's something that we're going to have to keep an eye on. And, one way to do that, we can come over here into viewers, go to the watch list viewer, and you can go to like S&P 500, for example. You can come down here, and we've been running 8-9% growth. Right now you're sitting right on a 9 down here at the very bottom, between PE and GPE on mine. So growth is hanging in there pretty good. And so you can come in here on, you don't need to overdo it, just kind of a weekly basis, kind of see where you're at. Because that's the thing to be mindful of is, where are we in terms, are we reaccelerating again? Are we stagnant, still at a pretty healthy level? Or are we losing a little bit of steam? right now things are doing pretty well. The other thing I would say on that regard is you can always take a look at the market climate graph, and you'll see that this is at the top. This is a 50-day average of earnings per share. And that's actually on a pretty good rise. And we're starting to see the ETI finally kick into gear because now it's starting to make some really good positive ground. And so things never totally got in jeopardy of turning below 1, which is good. That staves off bear market scenario, at least for now, at least from a earnings, inflation, and interest rate perspective. Okay. And we're now starting to meaningfully and potentially more meaningfully move the other way. So things might be heating up here. Now, that doesn't mean that inflation is not going to come back or any of those other things that you could be in a situation here where lots of stuff is going to go up. it's kind of is the way that I would put it. You could be in a situation where everything's going to be call that I think Rick used the term melt up earlier. Well, maybe you haven't even seen melt up yet. So, we'll see what happens when everything gets hot. All right. Let's keep going here. So what I'm going to do next, I just want to show you some of the things, some of the ways that I've picked some of those winners. And I think it's going to be good for you, whether it's short-term or long-term, because the key to my success is picking good long-term positions to start with my short-term trades. Okay. So it's interesting. A lot of folks would maybe sometimes take issue with when people say things like that, but I found it to be an absolute necessity because what it does is it eliminates a lot of the heartburn of the surge and the fall of not accounting for good quality when we're doing our picks. It gives me a lot more portfolio stability. Okay. And so let's look at a few things. I've already put a few lists of stocks together for us. I want to show you some of the ones that I think are of pretty good note. I'm going to talk about why. I really like this Aurora Minerals, and not just because it's in Chappell's Champ Search. And again, we did the whole thing. This is not financial advice. I'm just going to tell you what VectorVest is saying about all these stocks. Okay, and then you guys can help make some of your own decisions, hopefully. But this is Aurora Minerals. And aside from the nice price rise, aside from the fact that we are consolidating at a reasonable level of support, which for me is always the 20 average, particularly on well-traveled investment vehicles. What I mean by, I use a lot of fun language. I try to entertain people as well. When I say well-traveled, what I mean is good liquidity, okay? Good capitalization, for example. When we look at AUGO is actually perfect in terms of what I would be thinking about buying Monday. It's absolutely picture perfect, not just for that reason alone, and not because it's undervalued. Let's talk about why it's undervalued and why, even though prices were coming down, value was going higher. I'm going to say that again. We're going to talk about why, even though prices were coming down, value is going higher. That's not always the case, ladies and gentlemen. When we look down here at the bottom, we've got earnings. I would prefer that we're not tailing. This to me means they're getting a little less efficient. So they're probably doing something to try to accentuate the growth in the future. The reason I say that is because look at earnings growth at the bottom. So earnings growth with the rise of the metal prices is really continuing to accelerate for them. So their business, this is a look at their model as a business. Is it a working model, and how well and how efficiently is that model actually working? Earnings per share is the bottom line, okay? Growth is the engine, which by and large comes from the sales growth as a byproduct of that, okay? But when I make my picks, I like to try to find the ones who have the best combination of rising EPS and rising growth, because I want the accelerator to still be down. And if they want to try to grow their business and things kind of tail off up here a little bit, I'm not as concerned, because earnings growth is actually stronger than it's ever been. Okay, so we go to the next one. This is ASM. Just read some news articles about ASM over the last month. So if you want a silver miner that's got a tremendous amount of upside, this is it. Anytime we say things like that, we say tremendous amount of upside, it usually comes with a little bit more risk. You can just inherently look at the chart and tell this is riskier. Which one's riskier? That chart or that one? It's like going to the eye doctor, you know, that one or that one. Look at all the chop here. Okay. Some of you can't live through that to get to the 20 bucks that's on the other side of it. Because on a daily basis, you're going to be crying in the pillow at night. You know, don't do that to yourself. Okay. But on the other hand, if you want to take a smaller denomination of capital and try to, I'll tell you where the real money is going to be. The real money is going to be with some of the unknown names. It's not going to be the Agnico miner, Agnico mines or Barrick Gold or Newmont or, who are the names of the companies that when you call Kramer up on Squawk Boxes, he's going to immediately rattle off, right? Everybody already knows about all that stuff. Okay, the real gems are going to be coming from trying to pick one or two of these littler, more junior type companies or lesser known commodities where they're doing better than anybody else knows. And that's where VectorVest shines. Okay. And so here again, you have the beautiful earnings and the beautiful growth patterns. And by the way, that's 39% earnings growth. Okay. So they're moving. And certainly prices are catching up to value here, but that's, still not a major concern. This is a stock that could be one that turns into one that trades at a premium, because I'm willing to pay a premium for this kind of earnings and this kind of earnings growth. The bottom line is going up about as fast as any stock in the stock market. This is like looking at tech stocks 5 years ago. Okay. That's what the miners look like now. The miners look like those tech stocks, AMD and NVIDIA and everything 5-6 years ago, okay? This is the engine that's going to drive these prices higher. I don't care what anybody says. They're making more money on a per share basis more quickly than those stocks right now. And that's a fact. Okay, let's go to the next one. Here's look at the earnings down there. It's just mouthwatering. Look at the acceleration of earnings growth. Fascinating little miner here. Now I wouldn't buy this little sucker, me personally, unless it gets back above that 20 average. Something might be going on here. Maybe some new. You might want to check the news, see if there's something up. But you get back above that 20. Look at this. Look at this acceleration down here. Might end up getting a really good price on this Eris mining. We've been looking a lot at it in the Jockey Club. Look at the EPS and growth patterns on these stocks, okay? This is Centerra. That one looks good Monday. This is Barrick Gold. It's lagging behind. Now, it's got some of those characteristics. Maybe not quite the bottom line growth that I'd prefer to see, but the earnings growth is really kicking into gear. Here's Goldfields. Look at this stuff. Look at this. Now, not all of them look this way, okay? None of them look real bad. But these are some of the better ones. Like this is AEM. AEM has begun to kind of slow, but slow at what? 31, 32%. So, in any case, some of the ones that we're looking at look better though. Look at this. Look at the earnings here. I mean, it is just, they are moving, DRD. Look at value soaring while prices dropping. Look at that soar. It came down to, this one looks terrific. I mean, just mind-blowing. They're going to give you that kind of a discount on this kind of earnings growth. This thing's nearly worth $60 a share. It's trading at 32. You know it? And let's not forget where the metal prices are now compared to where a lot of these estimates came from. I mean, so hopefully at least I got folks a little bit interested. I wanted to reserve about, I don't know, 10 minutes or so to answer any questions that you might have. But, whether you want to invest or trade, there's opportunities here. And I'm not going to go through an entire trading plan, or an entire investment plan. More so, I think if you're not in a few of these, you're making a mistake, because look at the earnings where they used to be and where they are and where they're going. Where they used to be, where they are, and where they're going. There is no stronger correlation to higher stock prices in the stock market than rising earnings, period. There's no and, there's no but, there's no if, there's no other, there's no anything else. Higher earnings, and by the way, this is future. That EPS is where they're expected to be a year from now. It's not where they are right now. It's where they're expected to be a year from now. So you tell me, you be the judge. And if you're expecting a Hunt Brothers debacle in the silver market, it'll only be under the auspices of mass manipulation, which has happened before. JP Morgan actually went to court about that and actually lost $1 billion and is still doing it. Okay. So in any case, I laid my heart and soul. I laid everything on the line, everything on the table. Hopefully some of you all got something out of that, because I've been printing money like nobody's business over the last 6-7 months. And I hope next 6-7 months we do the same and we do it together. Rick, you got some questions? Are we good?
Hey, Steve.
Yeah.
Yeah, no, once again, just great presentation, Steve. There are some questions. Now you did say you're not going to lay out a whole trading plan, but you have James saying, how would you calculate your stops?
Sure. I'll run you through how I do my trading. I can do that quickly. All right, so let's take Aurora. Now, some of y'all aren't going to like this because you're not me. But I'll tell you what I do. Is that fair? AUGO, right? Let's take that one. Let me just put another chart up here, because I might get into this one Monday, and I'd be doing the same thing. All right, so if I take this trade Monday, it'll be above today's high, and only then, or this will be Friday's high, okay? I will only take this if it goes 12 cents over Friday's high, period. So that's your execution, okay? I will only sell it in the first couple of days if it goes below the swing low. My target is the prior swing high. And that's where you saw how I break my positions in half. I usually take half the position off there and let the other half ride. So for example, if I'm able to get in, let's say in the neighborhood of, let's just call it 67 for easy numbers, okay? If I can get in at 67 and ride this, I wouldn't try to take it all the way to the tip, because that's just asking for trouble. But if I could ride it to, let's just say 73 even. That's $6. That's $6 on 67. That's about 9%. If I can cut that in half there, that lowers my initial break even on the trade by 4.5% essentially, because you're only cutting half the position off. But it effectively, if you want to think of it this way, lowers your cost basis and still has all the upside left to run to 90 or 100 or whatever the other price you close the other half out is in the future. In the event that it's at a lower price, you're probably at least going to remain profitable in that trade. So that's how I trade. Now, in terms of investing, these are the kind of stocks I'll just, this isn't what I've been doing, but I'll just lay it out there and see. I'm flying by the seat of my pants here a little bit, but I'm willing to bet that if you just buy this on a C up and sell it on a C down, you're going to do pretty good. If you did nothing more than that on these money makers. So I think you could go as simple as just buy them on a C up, sell them on a C down, or defensively cover them. Or you could go more the trading approach like I like to go. So I'll give you two solutions. You got two for the price of one. Question. We got to stop doing that because we'll be here until 5 o'clock. Go ahead, Rick. You got another one?
Yeah, I know how you're going to answer this, but I think we should have it answered. So how do you handle buying something after a big update is a question from another James.
How do I buy something after a big up day? I don't.
Yeah.
So what I like to do on anything, even when I start out a new investment at this point, I like to buy it after a period of weakness on the resumption of strength. And that's the real key though, is now look, I'm more of a trader than I've got buy and hold stuff. You can buy those whenever you want. You can buy them at an all-time high, if you want, if you're going to hold on to them if your objective is 10 years. At that point, it doesn't matter, you know. But if we're talking we're going to be in something for days to weeks, then that kind of stuff does matter. So if it's days to weeks, the answer is you got to wait, in my opinion, for a period of pullback to a moving average or whatever you decide works for you before you get in. If it's an investment, you can buy them at surge into a high at three sigma. I don't care, because you got time on your side, right? So it just depends on your objective. Okay. I still can't keep my glasses on. They're new, and so I'm having trouble.
All right, we probably only have time for one more. There's lots of good comments in there. I'll give you one for Irwin. Steve, what type of stop loss would you put on one of these high-flying, high-potential gold or silver miners as a retiree who is living off our paper assets?
Well, we can't give specific advice like that. We're not supposed to, because we don't carry the series numbers to do that. But I would just say this. I mean, if you're looking at this chart pretty carefully, you see how this thing runs up? Where did it stop? Where did it go? Where did it stop? Where's it going? The 20 average on things of really strong quality, like an Nvidia even, or whatever, Nvidia, that's a whole different conversation. But when anything is on the move that's of any quality, a 20 average is a really good place to start looking. Okay. I really mean that.
Yeah, and you've been doing a lot of concentration on the 20 moving average in the Jockey Club these days.
Yep.
All right.
You can't get so tax averse that you don't ever make any money. That's the everybody's always worried about paying taxes. Listen, I get it. I'm getting close to, man, I'm not gonna say the number, but it hurts. I get it. So, but our job is to keep accelerating faster than the deterioration of money, right? So if it means paying some taxes along the way, as painful as it is, it doesn't matter. Go ahead.
I think Kirby was saying, Steve, thoughts on ETF metals like SLV, GLD that we talked about a bit earlier.
I do have thoughts on that. I've been telling the folks in the Jockey Club lately that I'm more interested in the miners at this point. I think the metals are going to be a lot more volatile. And I actually told them that before we started this year even. Once silver got to 100 and above, and I knew that was going to send some shockwaves through the financial markets. There just was no doubt about that. It creates a lot of questions. Let's just keep it that generic for now, okay? Now, so for that reason, if I were going to be trading anything ETF wise on spot prices or futures prices or something like that, I would do gold, or I'm not sure it would be silver. Let's just leave it at that. I think silver is going to go through tremendous fits and spurts over this coming year, if I had to guess. Is that fair enough?
Excellent. And I'm going to give you this last one. I'll give you this last one as a chance for you to touch on the Jockey Club. So James is asking, I might join the Jockey Club. I heard that Jockey Club is on YouTube. Is this correct?
No, actually, the Jockey Club is only through what we call our investor community room, or I'm sorry, I don't know what you call it, our community rooms, if you will. We have a Jockey Club room that you can become a member of. So I'll tell you this. Let me see if this is still working. This would be cool, because I just did a let's see, Yes, it is. You can go to VectorVest. Joey, put this in the chat. I know you can do it. You can go to vectorvest.com/thrive. VectorVest.com/thrive. You can try it out for 29 bucks. Perfect time to ask that question. You can try it out for 29 bucks for a month, okay? And it goes to 248 or a month or 25.90 a year afterwards. But I mean, as you saw earlier, even on 50K, we're already up nearly 6 grand this year. And you know, we made about, I don't know, 25 grand or whatever it was last year. Okay. But that's on that size account. So then you can do the multiples. Like one of my positions in my portfolio is 4 times that number to begin with. So, you know, it's like just do the multiples according to what your portfolio is. Yep.
All
I mean,
right.
like
Well,
4 times the total value of the portfolio is one of my stock positions. Go ahead.
yeah. Well, thanks again, Steve. We'll close out the questions. We're just past 12:30, so I'm going to move back to the slides here and close us out. But thanks once again
No worries.
for another excellent presentation, Steve, sharing the wealth of knowledge, of course. All right, so let's move ahead here. I want to remind everybody, if you haven't had a chance to check it out yet, the special presentation this week was entitled "Take Advantage of Downside Opportunity." Now, we still have to see whether that's how the market's going to play out here. But that was presented by Mr. Todd Schaefer, Manager of Research. If you haven't had a chance to check that out, check that one out. You can find that on YouTube as well as in the software. And as we do know, folks, we're into February here. We're getting awful close to the Tampa 2-Day, which is the stock market masterclass, February 20th to 21st. I've got the slide here for the in-person folks. However, and you can see the link here, www.vectorvest.com/Tampa to get to registration for that. However, you can see as of Friday, only 5 seats left. So if you want to get to that in person, if you're able to go to Tampa and want to get to that in person, you're going to need to ensure that you do so fairly quickly. All right. Now, for all of those that can't get to Tampa, we've got the good news that there is the live stream. All right. And the live stream, of course, free for all VectorVest subscribers. So you're able to tune in wherever you happen to be. And we've got the link right here, www.vectorvest.com/stream. Will take you to the registration page for that. It doesn't cost you a thing here, folks. So if you do want to catch that event, and I'm pretty sure you're not going to want to miss it, ensure you get registered either for the in-person or the live stream. All right. That will bring us to the end of the presentation. So I do want to thank Steve once again for a great presentation. Joey for keeping us all in line and behind the scenes once again. And most of all, folks, we want to thank you for deciding your weekend and spend part of your weekend. It's awful cold in a lot of parts of the world, so always good to stay inside when it gets that cold. But yeah, we want to thank all of you for joining us and sharing part of your weekend with us. Folks, if you need any help at all, don't hesitate to reach out to product support and training. You have the numbers there, 1-888-658-7638. We've got the local US number there as well for those that need to use that. We also have the support email, support@vectorvest.com down below.
Rick, I want to
All
throw
right,
out
but
I want to throw out 2 more quick things. Joey, you're going to be mad at me, but you'll forgive me later. There's 2 stocks I want everybody to just kind of keep an eye on. One is this little stock TRX. It's a gold miner. I forgot to get to it. I had a couple of wild cards I wanted to throw out there. So these are wild card picks. These are throw caution to the wind kind of stuff to some degree. This is the one that we made the 39% on that I could have made 120, but it's regrouping at a pretty good level to start looking at it again. Look at this earnings growth. That's what I was trying to say earlier is this earnings growth is on fire. And if you look at the news, and this might be one of the next ones to go. This is a silver miner. China has even made trips out there to try to buy the mine, and they did not sell it. So now I'm done. I promise I'm done. Kuya Silver is another one to look at. Now look, these are little tiny, teeny, tiny juniors. These are the ones that can hit the home run.
What was the other one, Steve?
The other one was TRX. These are the ones that could hit the home run, but these are the ones that you'll walk before you run. These are not the ones these are not for the retirement account. These are not for my children's college fund. These are hopefully you get the drift. This is the fun money. Okay. This is the fun money that could be really productive. I'm done. I'm sorry, but I had to get those in there, Joe. You'll forgive me one day.
So TRX was one. I missed the other one, Steve.
KUYAF. That's silver. They're a pure silver miner in Peru. KUYAF.
KUYAF.
Yeah, just go through some of the news. Just go through some of the news feeds on those two stocks, guys. You'll see everything I was talking about.
Yeah, I was just throwing them up in a graph for folks to see before we end. All right. So with all of that said, folks, as both Steve and I have mentioned, all kinds of things going on in the world, different parts of the world. Stay safe and healthy wherever you happen to be. If you're going to join us in Tampa a bit later this month, looking forward to seeing you. I did see Carol B making some comments about how fun the session in the Jockey Club was Friday, Steve. And Carol, awesome. Not sure if you're headed to Tampa, but it would be great to see you and meet you again there, as well as others out there. Go ahead, Steve. You're going to say something?
No, I just said I said thanks. Nope. That's all.
All right. Stay safe. But that is it for now. Take care. Enjoy the rest of your weekend and catch you back in the markets for another trading week next week. Bye for now.
Bye, guys.